Okay, so very welcome to everybody. Anybody that's just joining us or anybody that's on with us for the first time, this is our stock and option webinar. Um, and this is where I'm kind of talking a little bit about the approach, some of the things I think that will be interesting to trade and do and watch with the coming market situation here. So just a few things I'm liking, a few stocks I'm interested in, things that I think we need to look at on our approach to making sense of this market. So I welcome all your comments, all your questions, everything. Don't hesitate to participate. It always makes it a better situation for all of us. So I hope everyone's good. It's been a long day. It's been a long week. The markets have done all kinds of things this week. There's things to talk about and discuss and look at. So we're going to get right down to all of that. But again, don't hesitate to make comments, questions, discuss the things that you think might be interesting and worth looking at. Mel, rig. We'll talk about rig. We will talk about rig. And actually, that's a good starting point, Mel. Thanks for bringing that up. It's a good starting point, rig, and the whole oil market, oil-related stocks and so on. One thing that I like to use, and I'm sure most of you guys are familiar with this, Finviz and the map section. So, the map over here is kind of an interesting area to kind of just look at and see what is happening in the various sectors. And so I like to use this. If anybody wants the link to the maps on Finviz, I'm going to post that for everybody right there in the chat. Okay, so the maps are interesting to look at because we get to kind of see what sectors are doing best, which ones are recovering more and which ones are recovering less, and so on. I think at this point, we probably need to look at like the weekly performance. So what do we see happen? Oh, geez, there we go. By the way, there's a pretty incredible amount of pop-ups on this site because I don't pay for the premium version. Maybe I need to. Here's a couple of areas that we want to just watch and address and so on. Obviously, basic materials, right? Oil still getting killed. Right, ExxonMobil, Chevron, ConocoPhillips, all those guys, all these oil stocks just getting hammered to death. There's a few little random ones in here you see that are having some good days, but for the most part, oil stocks just getting killed, having a hard time. We're going to look at a couple of those. The financial stocks still just getting murdered. PayPal's having an okay day. I don't know what this green guy is over here. FRC, First Republic Bank. All right, I don't know why they're having such a good time. Everyone else is just getting beat up like crazy. Visa, MasterCard, American Express, Bank of America, Wells Fargo, Citi, so on and so on, right? Just having a heck of a time. And then we're seeing some of these industrial goods, it's mixed over here. We're kind of mixed in this area. GE having hard times, Boeing's coming back down again, Cat, John Deere, or just Deere. So a few things to look at there. The retail stocks, there's a lot of different areas to keep our eye on and see how things are going and playing out. Healthcare stocks seem to be doing pretty well. Tech stocks seem to be doing pretty well. Services stocks, a little bit mixed, but overall doing pretty well. And so we're going to kind of just have a little peek at all of these and how they're going and where they're going, and so on. Is the size, amount of trades, volume? Yes. Yep. I think I think it's actually market cap probably that determines the size of the things in the section. I believe. Maybe it's volume. I don't know. Could be one or the other. Okay. I've been talking all day on webinars and sessions and so on, so I'm going to have to keep drinking water about every few seconds. But this is a great tool to use. We want to keep an eye on that. So as we go over here and we look at, this is definitely something that's been getting a lot of attention, a lot of questions and so on. What is oil going to do? What is oil going to do? What do you guys think? What's everyone's take? I actually have people in the group here that work in the oil industry, and sometimes it's interesting to hear the individual take from all of that, from those that work in the industry and have exposure to that area. My neighbor actually works in the oil industry, and he's just been abruptly laid off fairly recently. So apparently it's not going so good. Oil is sitting at this crucial $20 level, right? This is, you know, good old U.S. oil prices. We'll see some different prices for Brent crude and so on. And I'll be honest, I don't watch that at all. But I do, you know, occasionally try to be exposed to what's going on there. But we're just kind of looking at oil prices in general here. So we have this little situation of oil being super crazy low, and what's going to happen? Are we headed into lower levels? Where are we going? What's going on here? Mel, Trump fixed the discord between Saudis and Russians, so we should go back up to $50. We'll see. We'll see. I think that we're probably in a pretty nice little low here, where you know, I think price may be stabilized. We've talked about this a little bit. This is our 2000 and at least that's what he said. Yeah, right. Yep. So this is our 2001 low. October, November 2001, oil got down into the $17-ish area. And I think we, you know, I wouldn't be super surprised to see that get hit. $20 is a good round number. That's a great support area, but don't be surprised to see $20 get hit. You know, the next thing below $20 is like 10 and 11. That's going to be some very extreme stuff. I'll say that I wouldn't be surprised to see a tap of that $17 level, but I would be pretty surprised to see that next low at kind of $11 get hit, $10, $11. I'd be surprised. Doesn't mean it can't happen, but I would be pretty surprised to see it happen. So as we're kind of sitting here and watching this, you know, play out, oil is going to have a big impact on some of these things coming up here. So, you know, if we just look at overall price action, right? Price action tells us that, you know, this came down with a pretty solid push here. Little double bottom, made a little bump up, and it's back down. And it seems to be holding at that $20 level. Again, I won't be surprised to see it push a little bit lower, but we keep hitting that, and it's kind of creating this channel. Now, this has been a theme lately in the market of looking for pause, looking for channels, looking for consolidation, because we've seen, you know, obviously the rest of the stock market has kind of had this big drop and then this just big comeback, right? Just pretty much a V-bottom type move. And on that comeback, you know, that big run up, we're looking for some consolidation to get, you know, ideas of which way things are headed, up or down, right? Oil is kind of getting to that pause moment, to that consolidation area, where we can now look for look for a little bit of direction here, right? We've kind of got this $28 high, and of course this, you know, $20-ish low. That's telling us, okay, there's some consolidation here. There's some good levels. Let's see, you know, let's see what happens. Let's see if we get a little bit more of this and potentially that, or if we get, you know, that continued break. So I'm not making any predictions because honestly, I don't know, and I don't think anybody else here knows. But I think we have a general idea of, you know, one more push down would be very okay and common and decent, and I think from there we can really start looking for a bit of a rally from those mid to high teens. So I think that's going to be kind of what I'll be looking for, and again, I won't be surprised to see it take off from $20. That's a great level as well. Dan, yeah, nobody's traveling, airlines, car travel, cruises, yep, and so yeah, so not only do we have a much less demand and use of oil as we have in the past, but at the same time, you know, we've got just tons of it, right? We've got this price disagreement going on among the cartels, OPEC plus. And so that's going to be interesting. Just to think about it, right? The price of oil is in the hands of all of these oil producers. Does anybody else think that that just is not good and right and normal? So oil is constantly, and everyone's come to this agreement, right? The cartel. And by the way, there's no coincidence that they call the drug cartels of Mexico and OPEC the oil cartel. They're all just groups of people determining something in an unhealthy market manner. So this is why I don't love to trade oil so much, because it's such a tricky little beast here. Yeah, I mean, basically gangsters. Yeah, exactly, Mel. It's price fixing in any other industry, but for some reason it's okay for oil, right? It's okay to have this whole thing go on, and so that's why it's a little hard to kind of tell where we're going to see things going, how the disagreement's going to go. It's a little tough to determine, what these guys and these countries and these, what the cartel is going to come up with. So anyways, as long as we know the levels and we can trade what we see, that's the goal. So that's what we're looking for. So how's that going to translate into some of these other stocks? Many of you know that I've kind of been watching and looking for RIG. I own some shares of RIG, certainly at a much higher price than where it's at, but it's a cheap stock and I'm okay to hold on to it for as long as I need to. Not super worried about it. Yeah, Mel, I hear you. I have a gas guzzling truck as well, so it's a monster. In fact, my truck is so big, I guess it depends on your region on how big it is. But I was sitting at a stop at a red light, in an intersection in a big city not too long ago, and people walking across the street in this big intersection, this busy city, stopped and came and stood in front of my truck as I'm waiting here in the road and took pictures in front of it. I think they must have been some tourists or something. And anyway, so it was funny. But yes, these big these big expensive ungas friendly vehicles are at least benefiting from this gas price situation. But anyway, we have this whole deal of oil stocks getting just hammered, and how are they going to do? How are they going to come back? Some of these industries that seem like they're going to just die a painful death, oil seems like one of those, right? Are we in this time? Yeah, probably, Martha. Are we in this time where there's not enough demand for oil, there's tons of supply, and we're moving away from oil? We're getting in that area, and we're headed in that direction, but still, the world is 99% dependent upon oil. Now, the U.S. has been producing its own, large amounts of its own oil for quite a while now. But a lot of big countries that don't produce their own oil are still large consumers and so on. So we're not moving away from oil yet, or really anytime soon. Yes, there's some electric cars out there, and they're getting more prominent, which I fully support 100%. I love that nobody's driving and the skies are clear and the pollution's down. I think that's great. I 100% support that. But it doesn't change the fact that we're still in an oil dominated world for the most part. So some of these stocks, for those of you that might have oil related stocks, right? I know some people are in ExxonMobil, some people are in RIG, some people are in some of these oil stocks. And obviously we had a big rundown on these guys with, the big coronavirus crash, and then topping that off with the big dip in oil. So a lot of these oil stocks are down a lot. And if they are, what I would recommend everybody to do, if you own, RIG at $3 or $4, if you own ExxonMobil at $50 or $60, so on, start selling options on these stocks at lower prices. If I own RIG, for example, at I think I'm in at $4 or $3.75, something like that. If I own it up here, I'm still going to be selling options down here, and I'm going to be taking the risk that if this goes up, I'm going to have to take a loss on the option, right? But I'm selling 150 options, 150 calls on RIG. with short expirations, 1 to 2 weeks, and just trying to make some money every week or two on these stocks while we wait for the recovery, while we wait for some of this business to happen. And I'm keeping an eye on them, of course. And if we do start to get a run up, I'll just close it and take hopefully a pretty small loss on the option, and make sure that it doesn't expire above my strike price, thus calling the stock away at a much lower price than where I bought it. So if you do own some stocks that are down a chunk, sell options on them, short-term options at much closer, at strike prices that are much closer to the current price, and just keep a close eye on them. Just make some money. If you can only make 30, 40, 50, 60 bucks a contract selling these, and maybe you own 100 shares, 200 shares, 500 shares, 1,000 shares, that's okay. Make 50 or 60 or $200 or $300 or $400 5 or 6 or 7 or 10 times while these stocks recover. So don't hesitate to do that. Norval, what fuel is used to generate electricity? Yeah, and that's true. And there's a lot of different sources for generating electricity, and honestly, I don't know what they all are. But yeah, it's a good point. Mel, yes, we're selling call options and collecting that premium. But again, if you're less experienced on the selling options, and you're still kind of getting comfortable with how that works and how it should work, just be careful on this. It's pretty hard to mess up a covered call when you're selling a strike price where you bought the stock, because there's not too much that can go wrong there. But when you're selling a strike price that's much lower than where you bought the stock, you do have to keep an eye on it and make sure that if this thing starts to move, you can close that option out and not end up taking a big loss on your stock. So yeah, I think I think that'll be the thing to do. So I am watching these oil stocks. I do think that there's going to be great opportunity here. Something that a lot of people are asking me is how many of these oil stocks do we think are going to go out of business during this whole thing? And my answer is I have no idea, but I think the bigger companies sure do have the ability and hopefully the cash reserves to make it through, some dips like this. I wouldn't be too excessively worried about that. Some of these smaller companies, Rig is kind of a special type company. I honestly don't know how many companies out there do what Rig does. They basically, they do a couple of things, but they build and service and lease the big oil drilling platforms out in the middle of the ocean. So I don't know what their competition is, but I think these guys are decently funded and able to kind of withstand some of this movement. So it just comes down to the fact that we've got channels, we've got things that are that are playing out, and these descending channels are going to just stay in place for a while, and we're going to watch them and be ready to kind of take the movement and see how it goes. Mass transit related stocks. Yes, there are several different kinds of things. I'll send you a list, Mel. There's a lot of, any ETF, any sector you can think of, there's ETFs that track that kind of thing. And if people are wondering what some of the favorite best ETFs to trade are, just Google it. There are thousands of ETFs, right, that can kind of cover various sectors that we might be interested in trading. One of the best places to go for that, by the way, ETF.com, as you can imagine. Good little site here. So this is a good site for just finding some of your favorite ETFs and some of the things that have to do with certain sectors you might be interested in trading. And I think ETFs are great to trade. I think kind of covering a sector is a great thing to do. It's kind of tough to do things with some of these individual stocks because some are doing well, some aren't. It can be difficult to really pick that great stock in a certain sector when especially if it's something you're not familiar with. If you're trading a stock that you haven't traded much in the past and you're not really familiar with what they're up to and how their movement is, ETFs can really be good to just jump into. So that's a good thing to look at. Would expect there to be a low ridership for a while. Yeah, yeah, that's true. That's true. Some of these public transportation. I mean, it's been, America has definitely been criticized for lack of good public transportation, and I don't think anybody's going to want to take public transportation now. It's it's going to be a very unappealing option for probably a very long time. So yeah, I think so. Free parking on the street in downtown San Diego. There you go. There you go. So rig, that's one to look at. I'm always watching ExxonMobil. I think these guys are relatively interesting. I think this is a large company that's got, a lot of reserves and a lot of ability to kind of withstand all this. ExxonMobil hit these lows back here of, going back to the late 90s and the early 2000s. Seem to be holding pretty well there. So that's pretty good. I think that's a nice little move there for ExxonMobil to make. One theme that you guys will hear me talk about over and over again is this kind of thing right here. This theme and thing right here, which is just kind of looking. I certainly don't live and die by Fibonacci, and I don't really even love Fibonacci, but I do love kind of standard deviations, right? And trying to just lay out a little bit of a picture on the charts of where we are in relation to this current movement, right? And Fibonacci is good because, it can give us some common levels. And our common levels are certainly kind of these middle three, right? 38, 50, and 61% retracement levels. And a lot of things that we're looking at, a lot of stocks are around the 50, and some have even pushed into the 61. ExxonMobil took a nice little turn right at that 38% fib, and it's been coming down. So, we're going to watch for some of those things. We're going to watch for those opportunities to get a lot of these oil-based stocks down here again, and maybe look for opportunities to buy some of those double bottoms and see if we can get that kind of movement. Something that I want to very much, and I talk about this constantly, and I've discussed this probably in every webinar we've had. Remember, guys, we do not want to get caught saying, hey, the market's up, let's buy it, and then have it do this, and then panic and say, gosh darn it, I was wrong, the market's down, I'm going to sell it, and then have it run back up and say, hey, everything's great, let's buy it again. Remember, we cannot get on the wrong side of this movement. Do not chase trades. Do not chase trades. FOMO, right? We don't want to have that. We don't want to have the fear of missing out. That's not going to work very well for us in this market, because we're going to have a lot of this kind of stuff happening where we hit some upper resistance levels and come back down and retest some lows and run back up and so on and so on. So wait for these trades. Wait for things to give you the setups you want. Last week I said, don't short the market, buy the dips. And I think that is still a safe and good thing to do. But I think there's also going to be some opportunities to short this market. And by shorting the market, of course, I mean taking some bearish option trades, running some of these movements down just a little bit. I think there will be some good opportunities there. So I take back a little bit of what I said last week. You can short the market, but make sure you got some, some good entries and some good areas to be doing that. Many of you have heard me say many times in the past, stay out of middles, and middles are not good. So we want to be trading near support and resistance levels. We want to make sure that we're doing that. There's so many stocks and so many just charts all over the place that are just right in the middle of everything. And remember, middles are tough because, there's my risk. In this short-term run, there's my risk. There's my risk, right? So as I'm in the middles, I have to let things run a long ways against me before I know if I'm right or wrong about the trade. So that's where, I'm saying be careful on shorting some of these stocks. I think there's going to be some good opportunities to do that, but be careful shorting some of these as we're in the middle of these ranges. Now, something here, ExxonMobil, that might be a good enough resistance level to trade against for that attempt back down at these lows. But at this point, I would just wait for this thing to get back down to the lows, sell some options up here. If you own ExxonMobil, sell some options as close to the current stock price as possible, because when and if this runs down, that's only going to do good for your options that you're selling. You'll be able to close those out sooner, take a little bit more money a little more quickly, and be good to go there. So just kind of look at that stuff and keep those things in mind. My goal of these webinars right now is to keep everyone on the right track. I know a lot of people are trading stocks and options, and some people are having great experiences and some people are having hard times, and we just got to keep a few lessons in mind. No matter what kind of market we're trading in, we always need to do a couple of the basic things, and that's, understand our risk, stay out of middles, all of that stuff, right? We have a lot of broadening patterns happening that are tricky, and we'll look at a few stocks there that can give us some examples of what I'm talking about. But watch these big sell-off ranges and look for Fibonacci levels. See what we can have happening there. See what we've got going on with some of those big long-term levels from these big movements we've seen. Look for taking profit, look for maybe even trading away from those levels. And Fibonacci, I haven't looked at Fibonacci much in years, and I'm looking at it now because we've had some pretty extreme movements that I think are good for looking at those Fibonacci levels. And in case anybody's wondering, I think I might have deleted this off my chart just recently. I add and remove it constantly. But I like to look at the 50 and the 200 moving average. I think these are both great ones to watch. And you'll see that a lot of these stocks have also kind of pulled back into those areas as well. So if you look at, a lot of these, you can see, ExxonMobil, for example, as it was pulling back to that fib level, it was also hitting the 50-day moving average. So that's something I kind of keep an eye on for added confirmation of, we're coming into resistance. So to kind of sum that up, oil stocks, these ExxonMobils of the world, and rig, and Applied Materials, and Occidental, and all these other stocks, I think are going to be interesting, and I'm just watching these double bottoms, and I'm watching these things happen. Obviously, these guys are getting heavily affected with lack of travel and lack of, cruise ships and airplanes and cars and everything else, right? But that's going to go away, and demand's going to come back. And so I certainly think there's long-term plays here, and there will be some short-term plays as we get back down to some of these key levels. So we get back down and we start to see, those crash double bottoms and some of those areas that we can trade from. So I'll be watching that. I'll be looking at some of these guys. Again, there's a lot of these that have kind of been making some of these crazy moves here, and just take advantage of things that are running into historic lows. I mean, you got Chevron over here that's hitting 2008 and 2005 levels, and coming off that pretty well. So again, just kind of be ready for that. Look for these double bottoms. Look for these pullbacks and opportunities to take some trades up higher there. And again, any stocks that you guys own that are down a bunch, sell options on them, and just short-term options, make a little bit of money, writing covered calls, and just hold on to your stocks. I had a friend tell me, I mentioned this probably last week, that he thought this was a great dip and a great opportunity to sell all of his portfolio and buy at a lower price. And of course, everything has not stopped going up since he sold everything on the dips. Remember, guys, we don't ever dump our stocks on dips. We just don't do that. We look for other ways to offset those movements, selling options, buying more shares, whatever the case may be. But just don't. Yeah, Mel, I think he single-handedly turned the market around for sure. So yes, we just, when there's big corrections like these, we certainly do not close out our stock trades and take huge losses. Because after huge moves down, we typically get big moves up, which we have absolutely seen everywhere. Okay, so that's some oil-related talk there. So I think those are going to be interesting to look at. I'm curious, guys. What are some stocks you guys are interested in? Where do you guys find yourselves putting most of your time and energy and attention? So think about that, and we'll talk about that in a moment. I'm watching. Here's SPY. Here has been a good support level turned a good resistance level. SPY has done nothing for about a week, and then we get this big after hours movement where SPY has moved from the upper 270s into the upper 280s, which isn't a massive move here. We're still kind of in this nice Fibonacci zone, but I'm still kind of watching for an opportunity to trade SPY down, and I think that there's going to be some movement here, even with this running up a little bit. I think we've got to get some correction. So I'm kind of watching that 61 level, fib level, and so on. But I still think we've got an opportunity to kind of get this guy down here just a little bit before we really see the big correction and the big move up. I still am not sold on the fact that this is going to be a straight down, straight up kind of movement. I could be wrong, and I have been wrong, and so on. But I think that's a good play to be looking for. Now, a couple of things to think about, though. Remember that in these kinds of market conditions, okay, there's some good stuff, guys. Thanks. Intel, AMD, LVS. Kevin, my man, good to see you. Amazon, yep. Okay, banking stocks, Tank, yep. So we'll talk about all those. But remember the market situation that we're in right now. So what has happened, and there's been a lot of good, there have been some differences here and so on, and we can dispute this all day long. But if we look at a similar sell-off in 2000 and 2008 or 1987 or whatever, right? Where we have the S&P sells off about 35% in about 3 to 4 weeks, which is what we've seen in all three of these occasions. All of them, except for this one so far, have either had a double bottom or made lower lows. Remember, 2008 did this, and then it did this, right? And it took, it made new lows, and it took months and months to bottom out, right? But interestingly, if we look at 2008, and how long it took from the first real sell-off till the time it retraced to 50% of that first main sell-off, it took 10 months to get 50% of that loss back. And for us, in this run here, it's taken 3 weeks or so, or 4, well, actually, sorry, from the first sell-off, it's taken about a month and a half, right? 2 months. So we saw things starting to kind of make these dips towards the end of February, and we're at the 50% level, about a month and a half later. So it's interesting how quickly things are kind of happening with this run. And everybody, wants to dispute about how different things were in 2008 versus now and so on. And, I continue to say things are becoming less and less different. We're now 20 plus million jobs unemployed. It's getting terrible, right? And I think everyone's finally past the point of, we'll just turn this back on and everything will be fine. I'm sure it's going to, we're in a recession. It's going to be a recession for a little while to come. How long that will last, who knows? But everything's happened very quickly, right? We had a big sell-off in the market. We had a big recovery. Things are just happening quickly. So it could be a very short-lived recession. We'll see. But one thing that the government has done here in the U.S. is they have learned how to prop up markets and let the economy catch up. And that was the goal in 2008, right? Get the market back up as quickly as possible. And it took them some time. And yes, there were things happening there. There was changes in administrations from one president to the next, and all kinds of things happening, right? But they took a lot of what happened then and did it, better, more quickly, whatever you want to call it now. And so we're seeing these much quicker recoveries. And remember, the market is kind of the thing that we gauge the economy with, even though it's not the best comparison, right? I mean, how many stocks do we know about that the company is doing fantastic and the stock is doing terrible, right? Or the company is doing terrible and the stock is doing fantastic. But this is kind of the perception of if the market's good, the economy's good. And so we're really working on pushing that perception of the market is good. And so the economy has to get better. And the market will be good before the economy's good. And everything is going to kind of work its way into just catching up with that. And that's kind of where we are, I think, right now. So let's look a little deeper into some of that. Yes, we'll look at that. Mel will look at a couple of stocks there. Patty, banking has tanked. Good opportunity to pick up stocks and sell calls. So speaking of the banking sector, I think I find myself going to Bank of America quite a bit. I'm drawn on these charts so much; they're looking crazy. I want to see these stocks go a little bit lower. I think the banking stocks are going to definitely take a hit. I mean, they're front and center on, they're right in the crosshairs of all this. Yes, they have the government backing them like crazy, and they're going to get tons of just backup money because just out of nowhere, everybody's unemployed and people are going to stop paying credit cards and cars and mortgages and everything else, right? And so the government's just going to be writing people checks. Banks are going to be getting zillions of dollars and whatever. But that's not going to change the fact that banking stocks are certainly going to take a hit. So I'm still watching for, this kind of stuff, for double bottoms to kind of happen there, and maybe even new lows. But they will be very, very good opportunities to buy some stocks and sell some options for sure. Now remember, when we get back down to that double bottom area, that's a pretty solid little zone, right? That was highs of 2014, 15, 16 on this stock, and so that was the big crash low. I think once we get back down to that $18 mark, which shouldn't be too terribly difficult, that's that's a pretty massive level for Bank of America, and I think that's a great spot to be picking up some shares, even if they head lower. The thing that we have to realize, guys, is there's trading and there's investing, and we're doing a little bit of both, right? And some of these stocks, if you can pick up banking stocks 50, 60, 70% off their highs, even if they go lower, it's still okay, right? It's okay if you buy Bank of America at 18 bucks and they go to $10, right? You don't want that. You don't want a stock to be down a massive amount from where you bought it, but you're still getting it at a great area and a great price. So the investor side of us needs to say, here's some great stocks that we can buy at very low prices. Let's do that. The trader side of us is saying, okay, can we sell options on those stocks? Can we buy puts to offset our losses, right? If you buy Bank of America at $18 and they go down to $10, can we trade some puts on that? Yes, we can. And that's the purpose of options, is to hedge and offset positions and so on. And so we can do that. We can definitely do that. Yeah, I saw that, Lenny. Yeah, Square and I didn't know PayPal was in on that. Offer some small business relief loans, so everyone's kind of jumping in on that. But we see the after-hour markets are looking pretty good. 22.70 on Bank of America, so they're making their way up here just a little bit. But let's, the one thing I do want to bring up is I want you guys to look at this, and this is such a simple old thing that I actually haven't looked at in quite a long time, which is I love patterns and I love trends and I love charts, and how some of these things play out. But we have some very just basic things in the work, right, in the works here, and that is, Bank of America, right, is creating a pretty fantastic bear flag, right? So, there's going to be, I was talking to someone earlier today and they said, I was picturing you going a very opposite direction on this whole thing. We might see some short-term channels, and Bank of America is after hours, it's already up a little bit. So it's kind of in this area. So it's already bouncing off this low. And we might see, that kind of movement happen, right? But this is a bear flag technically, and that tells us that we're likely to see something like this happen, right? We get this big run down and this consolidation up, and then it breaks and gives us a move down. So it's a very simple, very basic pattern, and sometimes the simplest basic things can work really, really well in these kinds of situations. So lots of pressure on the downside, some recovery, looking for some breakouts and, and some retests of these lows. So again, investor side of us, buy stocks if you can afford to. If you have a big enough account to buy some stocks and hold on to some of these, do it. Sell options, sell calls, buy puts if it continues lower to offset the exposure. But we want to jump in on these. And banking stocks are looking pretty interesting. And I'm looking for these guys to move a little bit lower, and then I want to, I do want to start buying into these. Wells Fargo. Mel asking about that one. Wells Fargo is kind of a plagued company, but they're up a little bit too. They're up almost $2 after hours. But yeah, I like all these guys. I like all the banking stocks. I like all these. Can we buy these great levels? I would even consider buying Wells Fargo at in the low 20s, right? Even though I think they're crooked, terrible people. I would buy their stock in the low 20s and kind of see how they play out. But again, we're getting these very simple basic price patterns, and again, it's bouncing off that. So we'll see tomorrow that Wells Fargo is going to open a little bit higher, and maybe it continues to kind of do that, and then gives us that one more plunge down there, and we can get we can start buying those big dips. Again, banking stocks are going to be heavily exposed to all of this economic craziness. So we've got to be careful there. But I just think that there's going to be a good opportunity with these guys. So buy on the plunge. That's right. That's right. And of course, the holy JPMorgan, these guys are up a couple of bucks as well. Same kind of situation, great stock to be looking at. Pretty solid channel. And again, this takes us back to kind of that theme that I'm talking about of all these rising wedges that are just occurring everywhere. So let's be ready. Let's be ready to trade these guys. Let's be ready for this kind of movement. But I like JPMorgan. I think these guys are good. I know some people bank at Chase. I've got Chase credit cards, and we'll see how it all goes, right? But as we get down to kind of, we get these big broadening patterns, we have big support levels. I like all of these, but I do want to, I am going to be cautious and careful. And of course, the more expensive these stocks get, JPMorgan's not a cheap stock, but still, they're coming off some pretty major levels, and they're sitting around some pretty good support zones. So these are just on my list of things to watch and trade, and looking for, again, these very simple bear flags to play out. If price is rejected off those levels and continues higher, we'll see how that channeling goes. But it's going to take us right back to the theme that we've talked about, which is, if we get this kind of movement, what do we want to do? We want to be getting bullish on those dips and taking profit on those spikes, right? So just kind of remember that, but I'm still standing by those banking stocks. If you guys want to hear something crazy, I haven't even looked at the chart in the last day or two or three. The cruise lines, right? Carnival and Royal Caribbean and so on. Look at Carnival after hours, 13 bucks, closed at 11.85, trading up around 13. I just read that cruises in 2021 are cruise bookings are way up. People are like anxiously booking cruises for next year. So there might be hope for the cruise lines. It's going to be a little while before I take a cruise, that's for sure, like a medium long while. Sounds fun to go on a vacation wearing a mask the entire time. But the cruise lines are making a little bit of a comeback. So these guys might be some sneakers to be looking for. I'm not ready to take a trade here yet, but I think there's going to be some opportunities. Royal Caribbean's up to 37 bucks. They had a low of $20, and after hours trading at 37. Off their 135 highs. So there could be some opportunities on these cruise lines. So those are going to be ones I'm going to keep an eye on as well. Okay. What do you guys think so far? Questions, comments? If nothing else, the thing I want everybody to take away from all of this is sometimes the simplest thing is the easiest thing and the most right thing. Like we're talking about watching those real short term bear flags and just saying, we might break those lows and retest, or break those trend lines and retest those lows. Simple stuff. Don't chase trades. Don't think that the market's up and it's a great time to buy. And the reason I keep repeating that is because I keep seeing people do it and they keep getting burned on it. So don't do that. Just, if something's up, let it pull back before you buy it. Don't be too anxious to short the rallies as well. The safest thing to do is take profit on the rallies and just let this thing pull back and let it pull back. The investor side of you should be okay with buying some of these stocks that are majorly off their highs and holding on to the stock and buying some puts to offset the downward movement and selling some calls to make a little money as it slowly moves up. That's going to be a good thing to do. Yeah, Kevin, Boeing is an interesting one. Same kind of thing here. They're up a chunk in after hours, 10 bucks, which is crazy why they're up at all. But Boeing's going to be a stock that, they're so backed by the government, and even though they're making crappy airplanes that just can't seem to fly, and they've had that 737 MAX situation was such a disaster, and that led them right into the big sell-off here. But they still have huge government and military and defense contracts, and they still make tons of money. So Boeing's going to be okay. Yeah, I think they might be too big to fail. Didn't Boeing request specifically? Boeing requested how many billions? Wasn't it like 14 billion or something in government bailout money? So Boeing, I mean, they're up a chunk. They're certainly up a chunk. I would say I would like Boeing to maybe get a little tiny bit back down towards those lows before doing anything. But they hit a great level. They got all the way down into this zone down here, taking us all the way back to 2012, 13 kind of areas. So pretty good area for these guys. I think it's probably a decent time to be looking at them, but they're expensive enough and volatile enough and crazy enough that I want to see them get a little bit lower before I think about doing anything. So government asking for equity, yeah. Oh yeah, it's the airlines just get bailed out constantly. Amy, GILD. Well, okay. So before we go to GILD and so on, let's look at one or two more airline stocks, and we'll just see what might be interesting there. Dan, yes, Fibonacci is an indicator on your charts. Yeah, it's right here on TradingView. If you go to the little pitchfork button and you go most of the way down, you'll see fib retracements. So yeah, yeah. Send me a message and I can give you a little more information on that. But Fibonacci's, that's cool. It's a good little thing. But yes, so airline stocks, everybody's up a little bit. Delta's making a little bit of a move. They're up a couple of bucks. They're still kind of slugging around these lows, but I'm interested in them. Buying Delta at 20 bucks. Great. Maybe I'll sell Warren Buffett a couple of my shares, make him feel better about his investment. Yeah, we'll be watching those guys. We'll be seeing where they go. Southwest is getting just hammered here. Southwest is having kind of the least amount of recovery as all these after-hour stocks that are doing good. And Southwest is still slugging around these lows. But I think Southwest is a good company, and they have some good opportunities there. United, watching these guys. They're up a little bit. American Airlines, I think they're terrible, and I probably would never buy them. But, there's going to be a couple of stocks to buy as this recovery gets underway. Okay, Amy, GILD. Everybody asked me about the pharmaceuticals and the biotech companies, and there's so many of them working on so many different things. It's going to be a race as to who comes out with some sort of vaccine that's going to be really exciting. I just don't know enough about this sector. For some reason, all these companies saying we'll have a vaccine sometime next year just doesn't sound very exciting to me. Next year, okay, good. That's like saying you're thirsting to death in the desert, and we'll have water in about 3 months. Okay, well, we'll be dead by then. Not that we're all going to die of coronavirus, but it just feels like that's so far out that I don't know how I would try to trade the biotech and pharmaceuticals, because whoever wins the race to the vaccine, their stock's going to do great. And nobody seems to be doing anything too terribly crazy right now, but I think these pharmaceuticals could definitely be interesting for just very simple credit spread trades. They're not really going down much. And so, and some of them are going up a bit. Some bullish credit spread trades where we're just trying to keep it above a level. I think that's kind of the thing to look for. So that's that's kind of what I would do with some of the biotechs and pharmaceuticals, is just, trade some bullish put spreads on these guys. And, I think they're mostly safe from going down a bunch. I just don't know how much they're going to go up. Vaccines aren't usually very profitable. Interesting. I read that the typical vaccines that people do, I saw a documentary on this. There was like one guy that made one vaccine, one of the ones that, you give kids and all that, MMR or something like that, and patent it, and he makes, billions off of it, and the company that distributes it makes billions off of it. Well, I thought I heard that they were pretty profitable, but I can't say for sure. I guess I don't know, but it seemed like that one was doing pretty well. Yeah, good PR. Profitable for lawyers. That's true. Okay, so those are what we're going to look for, guys. That's the flu vaccine. Okay, I got you. Yeah, the flu vaccine might not. Isn't that like $10? I don't know. Yeah, if the flu vaccine's cheap. Although I wouldn't be surprised if if this coronavirus vaccine comes out and they say, okay, insurance companies, you're on the hook for all this money, and if not, it's it's $500 a shot or something. I don't know. We'll see. Yeah, good stuff. So, more than anything, I want to make sure that everyone feels that they have permission to not try to chase all these trades, to watch out for things that are in the middles. Middles are tough. Broadening patterns are difficult to trade when we're in the middle of them. So let's just, let's be patient. Let's watch these things. Let's let price come to us. Let's trade the setups that we know are good, that have, high probabilities. And let's go that route. When we see these big kinds of patterns in the works and we're right in the middle of them, it can certainly be tough. It can certainly be tough to trade some of that. So, you know, let the pullbacks happen, let the run-ups happen, let the consolidation happen. You know, be prepared to kind of trade those, you know, those breakouts and those, you know, those moves up or those moves down. And you know, don't chase this market up. Just be ready to buy those dips and you know, watch some of these beat down stocks. I think there's going to be some interesting opportunities for banks and airlines. And I think some of the other big stocks out there are going to do well also. I mean, we've watched Netflix just murder this high, right? So Netflix has just gone right through all-time highs. I'll be very interested in Netflix on some of this pullback here, and we'll see how it goes. So watch these resistance levels and you know, look for some of these things to pull back, right? Look for Netflix to give us a little bit of a dip, and look for some of those opportunities as well. So that's kind of what we're looking for. We'll see how things play out. The market's all up in the after hours. We see, you know, we see futures up a bunch, and that's great. So we'll see how it all goes. Nice little gap higher there. But be careful, guys. Stay safe. Stay healthy. Let's watch some of these setups. Remember, boring stocks are good stocks. They tend to do well in this kind of an environment. So find those boring stocks that nobody thinks is going to do well and trade the heck out of them. We'll have more to talk about next week, but I think we've got some good setups to look for. And I'll post some more charts in the chat for this group as we go throughout the week, and some setups that I think are going to be good to trade. And we'll take it from there. Thanks for being on, guys. Nice to see you all. Have a wonderful rest of your day and rest of your week. We're headed into the weekend, which is very exciting, and I'm looking forward to that. We'll see you guys next week, same day, same time. Plan on joining us. We'll look forward to it. Thanks, everybody. Take care. I'll get this recording posted as well ASAP. Thank you, guys. Take care. Have a good rest of your day.